Today we're gonna talk about market bottoms. One of the easiest ways to spot them in the market is catching extreme market drops. But let's be real, are you really gonna stare at charts all day, waiting for a perfect dip? Of course not. What a waste of time. That's why you need a simple, effective and straightforward indicator that gives you buy signals when potential market drop occurs. But these signals aren't just based on dips. We're gonna backtest it across multiple assets and timeframes, so by the end you'll know exactly where it works and where it doesn't. So, let's jump straight into it. Go to the Indicators tab, type Finds Market Bottoms, and select the one by TradingView. Since it's a private indicator, you can get access by simply going to our website, Free Indicator section, search for Finds Market Bottom, and add it to your favorites. This tool, based on Williams VixFix Indicator, helps traders identify potential market bottoms by spotting panic selling moments. It detects when prices drop too fast compared to the past highs. It also uses Bollinger Bands to determine if the drop is extreme. If the price falls into a historically rare low zone, the indicator signals a potential buy opportunity, suggesting that the price may soon stop falling and start rising. You can see that this indicator easily spots market bottoms with the buy signals tab appearing under the candles. But here's the real question. How do you automate these signals? How do you open long positions every time a market bottom appears? That's simple, with the Strategy Builder. It saves you tons of time and headaches because no coding is needed to build and automate strategies in TradingView. You get a simple interface to build, combine signals, and set alert for any TradingView indicators. Sounds too good to be true? Let's see it in action. Here we make sure to select long because we want to open only long positions. We turn on one signal for long, and here we just need to select Find Market Bottoms. And then we have just converted the buy signals into long positions, as you can see exactly here. Now, once you enter a position, sooner or later you wanna close it. If the prices goes against your position, you wanna make sure to cut losses by setting a stop loss. But if the prices moves in your direction, you want to secure profits by setting an exit target. For the worst case scenario, we'll set a stop loss based on the ATR, an indicator that measures price volatility and adjusts the stop loss level accordingly. For take profit, we'll use a risk to reward ratio of 2, meaning we measure the stop loss distance and double it to set our profit target. That's wonderful, guys. We have just completed our strategy. You now understand why, where, and when to enter and exit trades. We are ready to analyze how the strategy has performed based on past market conditions. Let's analyze the backtest results. Here's our spreadsheet. As you can see, we have multiple backtest results. They cover various assets and timeframes ranging from 5 minutes to 4 hours. All results are sorted by net profit based on $10,000 order size and 1x leverage. We're gonna start to analyze the top performing one asset. As you can see, guys, we have a spectacular rising equity line. The total net profit is 544%, 39% max drawdown, 157% trades, 45.86% win rate, and 1.87 profit factor. The net profit slash drawdown is 6.18, which is a high value. The daily profit is 0.55%, is on the average, max win row 6, max loss row 7, pretty balanced ratio, expectancy 0.47, another amazing value, max win trade 44%, absolutely amazing, while the max loss trade is 23.36%. It's quite high, but we can always lower it in the risk settings of the Strategy Builder. Of course, if you try to reduce this value, inevitably you will also reduce the win rate. But you know what's really interesting about this strategy on this asset? It works, meaning it makes profit on 4-hour time frame, as you can see here, on the 2-hour time frame. As you can see, we still have 500% net profit. The 1-hour time frame is the one we backtested and analyzed before, and even the 45 minutes time frame. This should give us a lot of confidence. Then, when you switch to the 30 minutes time frame, we see that the strategy starts losing. But this is exactly why we need backtest. Backtesting helps us find out where a strategy works and where it doesn't. Unless you are a highly experienced trader who has traded the same strategy for 1-2 years, going live without prior research is like searching for a needle in a haystack. With countless market variables at play, the chances of random trading idea working without prior supporting data are nearly impossible. That's why we are so obsessed with backtest and we love doing it. Another bad aspect of this strategy is that if you notice the monthly table, we have the 2024 and the 2025, which basically have zero profit. This is because we have had an open trade for over a year, specifically 1 year and 3 months, that hasn't been closed. This is because we are using a stop loss based on the ATR, which measures volatility. In this market phase, there was a lot of volatility, making the stop loss larger. Since we have a larger stop loss and the take profit is twice the stop loss distance, the market didn't hit either the stop loss or the take profit, so we still have an open trade. By the way, this is a very important aspect when using exits based on the ATR, because high volatility can cause larger distances. It's always recommended to set a maximum stop loss based on the percentage to avoid oversized stop losses when using dynamic exits. I hope you found this indicator, strategy and backtest evaluation helpful. If you did it, consider checking out this other strategy right here.